Hello, good afternoon. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of European market analysis for Thursday, the 4th of February 2016. This video is being brought to you courtesy of CFDs.com. Be sure to visit the website www.cfds.com for your trading needs, and certainly be eligible and qualify for the potential bonus offer of up to 25%. That's currently being generously applied. Now, alternatively, you can visit the cfds.educational site for my latest charts and analysis and videos. Okay, let's try and sum this market up now in terms of fundamentals, chronologically, and then the news flow on the actual potential movements that occurred today. I've had a negative week this week, very hard for me to read exactly what's going on in this market, very tough to say the least. Now, the Asian markets overnight, given the fact that China obviously is now gone on holiday, we have the Chinese up by 1%, more or less 1 and 1.5% across the board. We had a healthy pullback in the Nikkei of almost 0.8%, nothing substantial, just a healthy pullback. So, how do we basically interpret the actual Asian session? Basically, sideways to potentially bullish. Okay. Obviously, going into the European session, given the fact that we had quite a stellar rally overnight in the US markets, if I bring up the US markets for you, let's bring up the potential position, the way in which we were positioned overnight. If I bring up the chart of the NASDAQ, it's probably the best way of summing this up. 60-minute chart, you had an inverted head and shoulders formation looking to potentially thrust higher. Now, if I just bring up a daily chart of the NASDAQ, you've had bottoming tail. You certainly put in a bottoming tail yesterday, and certainly looking to potentially thrust higher as well. So 60-minute chart was certainly set for you. The scene was set, and you were looking to consolidate and potentially thrust higher. Now, you did have GoPro earnings that certainly hurt the NASDAQ, although overnight Asian markets certainly sidestepped that and certainly pushed higher, so quite impressively. So for now, you have this bullish green candle that was put in on the 3rd of February, or i.e. yesterday. Now, provided that holds, and it has held thus far, the bulls certainly have been strong. Okay. Now, in terms of the European session, we did have stronger German data out. If I just go over the economic data or news points themselves for today, let's just go over the news points. Now, we had Mr. Draghi speaking this morning. Now, that was the game changer as well to a large extent. Now, Mr. Draghi, I interpreted the comments from him as being dovish, but the market obviously interpreted it in another way. So, given the rally, you can see here quite a substantial lift higher as soon as Mr. Draghi spoke in the morning. I'm not sure what he said that was overtly dovish. I think the only way, well, there was a spin that I've read thus far is the fact that he was talking up inflation, but we had another ECB member talking down inflation. So if he's talking up inflation, why would he need to do QE? This is the thing, you see, with regards to fundamental analysis, that it's very subjective. So why would he claim that he has to assess the impacts, etc., etc., and then talk up inflation? Certainly doesn't make sense. If anything, it's the other way around. So from my understanding, basically, is the fact that it wasn't Mr. Draghi, really, in reality. It was the fact that everybody was expecting to be overtly dovish and obviously reverse the actual Dudley rally. And that obviously did not occur. So the market punished him for that. And you've seen the euro on the daily chart thrust higher. We've actually broken above the 200 MA. We've broken past previous support equals resistance. Now the potential next resistance zone we did have was at that 200 MA. Obviously we've broken out now. Looking at a 4-hour chart to see if I can find a potential resistance zone for you. I mean, at present we have a topping tail anyway from the 4-hour chart, and you are looking at a potential reversal, which in turn obviously will help European equities. Now the 60-minute chart, as you can see, it's an inside bar thus far, so certainly helps and supports a rally in European equities, given the fact that we are consolidating within that. The 10-minute chart itself certainly is signaling to you the other potential H&S formation. So if I just bring up this chart for you, you can see the left shoulder here. You've got the head, and then obviously you'll create this right shoulder, and you're looking to potentially move lower. Now, that's obviously coincides with the chart of the dollar itself. If I bring up the chart of the dollar, you can see on the 60-minute chart, and even on the daily chart to a large extent, you are holding that pivot low. The dollar chart is holding that key diagonal trend line, holding above the 200 MA, which is a positive sign. So the bulls certainly are in control on the dollar index, and you are holding support. So even with the weaker economic data out of the US today, the dollar has failed to propel any lower, and certainly is holding thus far. Going on to a 10-minute chart, you can see the dollar index has not put in a lower low. If anything, it needs to close that potential gap above, and that certainly seems to be the next scenario with regards to that. So that should be interesting to see how that plays out. So for now, how do we interpret the market? Again, it's all about the euro and it's all about the yen. Now let me just bring up the chart of the yen as well. Let's just bring up the yen. I don't think I've got the yen here. Now let me just bring up the yen, because remember, this whole market is about QE. So it's all about the yen and the euro. So whenever the yen and the euro start to appreciate, this market starts to have problems. And ever since Mr. Dudley basically gave his weak dollar speech yesterday, this market has been in a conundrum. But it's certainly given the commodities a much needed lift, but the rest of the market certainly has gone into a swoon. So interesting scenario. Okay, so for now you can clearly see that we are into a resistance zone there. You can see on the diagonal trendline chart certainly key resistance. So the yen is certainly into resistance and holding, and therefore that's bullish for global indices. The euro now, which I've explained to you as well, has a H&S formation and now looking bearish. Again, it's all about Dudley. Remember, that's all about Mr. Dudley. Okay, so the euro itself has an H&S, so that should generally be net positive for European equities. Okay, net positive for European equities. So the dollar certainly needs to start to rally here in order for the equities to reverse. Now, the Shanghai index, which is quite interesting on the weekly chart, is positioned. You can see it's holding that 200 MA above. Certainly remains bullish. The Nikkei, a bullish pullback. The negative yen, the bottom certainly holds, and you are looking for a higher high. That's basically my interpretation thus far, and therefore you are looking for a reversal in markets. So certainly all eyes on that. Okay. So the euro and the yen are signaling resistance, which means that equities are now potentially into support. Okay, so it's quite important. Okay, so in terms of the yen and the euro, bear that in mind. Okay, now in terms of economic data, we did have construction data out of Germany that certainly was better than expected. It was all about the BOE today. So we had the BOE certainly basically were more dovish than expected because of the U-turn by one of the BOE members, and certainly pushed back a potential rate hike by 3 years. It's not exactly hawkish. So again, that is interpreted as being, from my interpretation, certainly will help the FTSE 100. So you have dovish monetary policy in the UK, given the fact that you're looking to a potential oil rebound as well. So overall, net is positive for the actual equity market itself. With regards to the US session, that's where the carnage started. Continuing claims stronger than expected. Continuing claims actually weaker, i.e. negative for the market itself to a large extent. Well, continuing jobless claims, initial jobless claims actually came in higher than expected, and continuous jobless claims actually came in slightly lower. So a mixed picture there. Unit labor costs actually rose. So again, that should certainly support the dollar, given the fact that unit labor costs are rising, and non-farm productivity actually fell quite substantially. So again, it's a conundrum. Factory orders actually came in more or less in line. Expected was minus 2.8 from what was it 2.8, or no, the previous figure was 2.8. Sorry, the expected was minus 2.8, the previous was minus 0.7, so actually came slightly worse than expected. And that's basically the scenario. So again, it's supporting the fact that we don't need a rate rise, or potentially even a rate cut we require. Okay, so that certainly is a scenario. Now, the dollar certainly has factored that in. Now, that certainly is something to consider as well. The dollar has factored that in. So the dollar, will it continue to fall? No, because I think all the bearish news is totally baked into the cake now. So I do expect the dollar start to USD JPY to start to rise, and the Euro USD start to fall, and that should obviously start to inflate European equities. Okay, so let's see exactly where we are positioned now. Before I do that, I just need to go over the key sectors. So first of all, the banking sector. This is the FTSE 350 banking sector. Okay, now this has been butchered. As you can see, this chart certainly isn't very healthy looking at all. Okay, so we are into We certainly have put in a handsome bullish candle today, so potential reversals on the card. 60-minute chart no longer has put in lower lows and lower highs, and we are looking to potentially stage a rebound. This 10-minute chart certainly has started because you've no longer made lower lows, lower highs, and you're making higher highs and higher lows, and that certainly is a positive sign. So bear that in mind, given the fact that financials have caused so much carnage. Again, now looking at the European banks, European financials, again the daily chart certainly staged a green candle, certainly a healthy signal. 60-minute chart, potential double bottom, looking at a potential reversal here. And the 10-minute chart certainly has your classical inverted head and shoulders formation. So if we can hold this left shoulder here, we've obviously got the head, looking for a slight pullback here, and then obviously off to the races we go. So again, take that into consideration as well, especially with regards to the carnage from Monte dei Paschi and the Italian banks, etc. Okay, oil and gas, again, energy sector. Okay, so let's look at the energy sector from here. The daily chart, the energy sector, you have an inverted head and shoulders formation, certainly signaling a potential reversal in the energy stocks. So again, that certainly is a bullish sign. Okay, so bear that in mind. So again, 60-minute chart is showing you are coming into potential turbulence and resistance, but the daily chart tells you that it certainly wants to go high on the back of a potential weak dollar. Okay, so again, that certainly is some food for thought. Okay, right, in terms of the rest of the European markets, European oil and gas, European, we looked at financials and banks, energy sector, European, again, same pattern, inverted head and shoulders formation. So it certainly does bode well. Okay, certainly bodes well. Certainly looks like we've potentially put in a bottom in the actual commodities, and given the fact that even if oil does fall, it won't fall as substantial as before, and that $28 to $26 level certainly looks like it's bottomed out for now, especially with rumors and talk of a potential OPEC cut and OPEC meeting. So that certainly should keep the actual energy sector at bay. Now, having said that, let's bring up the chart of the FTSE 100, because again, it's all about energy. Certainly is about FTSE itself to a large extent. So let's just bring up the chart of the FTSE 100. The 10-minute chart certainly has a potential now for an inverted head and shoulders formation. That certainly needs to be taken into consideration. Okay, in terms of the FTSE itself, you've put in the pivot low at 5830, so that certainly is a zone that you work off for now. The 60-minute chart at the moment, again, you're not putting in a lower low, lower high. You are looking to potentially even break out here. So again, that certainly needs to be respected. If we do break out, you're looking at 6,000 as a potential next target, and that's led by the energy sector, like I said. Okay, daily chart of the FTSE itself, yes, we certainly have made an inside bar. It's whether or not the oil price can start to rally from here and we can break out on this red candle. Now, is the rally on the UK market supported by the rally on the S&P 500? That's the question. Now, we did have an inverted head and shoulders formation. Unfortunately, it has failed because we traded above and then obviously right back down into the neckline. We are potentially looking at consolidating here before we make the next move higher. So again, it's that unfilled gap at 1940 that will be the potential target. The 60-minute chart certainly remains bullish with this bull flag scenario that you can see here. And again, the next zone there certainly seems to be the 1947 and 200 MA resistance. Okay, given the weaker data that we've seen, the market certainly seems to be taking it in stride and certainly holding. The market certainly is holding well, hasn't made a new low. That certainly is a bullish sign, and certainly looking to potentially thrust down on the back of expectations being pushed back with regards to future rate hikes. That certainly seems to be the main theme. Okay, right. So again, bear that in mind. The euro and the yen are into potential resistance. Okay. Now let's go over to the Euro stocks now. Euro stocks, you can see here on the weekly chart, we're into that 200 MA or pace of 200 MA. We are back into that diagonal trend line or horizontal support. The daily chart at the moment, potential double bottom and looking to potentially hold given the doji candle today. And given the fact that the Euro USD now is certainly looking potentially overbought and waiting for a pullback. The actual chart of the 60 minutes, again, that bottoming tail certainly has held. The double bottom certainly has held. You do have an inside bar on the 60-minute chart. You are looking to potentially consolidate and then move higher. Now, the 10-minute chart on the Euro stocks, you can clearly see there's an inverted head and shoulders formation. Left shoulder, head, then the right shoulder, and then obviously looking to potentially move higher. Okay, So again, looking to thrust higher and looking to close a gap at 2950. Now that certainly seems to be the first target on this Euro Stocks trade. 2950 zone again will be the target on the Eurozone, so keep an eye out for that. Now, is that supported by the S&P 350? Yes, you can see the S&P 350 is at the double bottom support as well. Stock 600, let's just bring up the Stock 600. And again, that's potentially at gap fill support and putting a potential bottoming tail. That certainly looks bullish. Bring up the chart of the German DAX. Again, the German DAX is hugging and holding on to that key support line at 9350 and certainly looking to hold. 60-minute chart certainly has thrusted higher. Again, that's the same type of pattern. It has that inverted head and shoulders formation. So given the fact that the euro certainly, like I explained before, looking for a potential top in the euro and looking for a rally in the German DAX. So this is your inverted head and shoulders formation and looking to certainly move higher. So the bias certainly remains bullish for my understanding and my interpretation for the German DAX. Okay, certainly looking very bullish. The first test of resistance will be at the 9,600 level. Okay, so the Europe, we've discussed the MDAX itself. Again, MDAX on the daily chart, you can see that we held that gap fill support, looking to potentially move higher, and you can clearly see the inverted head and shoulders formation there too. You can see the clearly see the inverted head and shoulders, which really is running along almost every index at this current juncture. 60-minute chart, again, it's closed that gap and looking to potentially move higher. Okay, now tech all share, again, it's in that gap fill support at that double bottom support and looking to potentially thrust higher. Okay, now the CAC itself, let's bring up the CAC. The CAC, again, 10-minute chart, certainly looks like an inverted head and shoulders. 60-minute chart, we certainly held the gap fill potential support. Bottoming tail has held as well. Looking for an inside bar, then looking to potentially move higher. An inverted head and shoulders, this is your right shoulder, and off we go to the races. So all eyes on the IHS. Okay, the FTSE we've already covered, so I think I've covered everything there in a nutshell to a large extent. We can look at the German banks. The German banks in the 1 hour, you can see what we've certainly put in a potential bottom. Daily chart, certainly looking at a potential doji and then a reversal. We'll go to zoom out to a monthly chart, really in charted territory by the looks of things. No data on the monthly, and the 60-minute chart, like I said, is looking for that potential gap fill. And the base has been built. Okay. Automobile, again, certainly a thrust higher. Retail, certainly a double bottom support there. The Aussie and the Kiwi certainly looking very, very toppish and looking to reverse, and obviously that will help the dollar rally as well. Okay, I think that's a market wrap. My basically conclusion is that we are looking to potentially thrust higher on European indices. Be sure to visit cfts.com for your trading needs. Goodbye now.